Hello, and thanks for joining us today. I'm super excited you could be here because today we're talking about financial freedom. We're really talking about some of the things you should be working on right now to truly accomplish that, and basically how to align like your money with your goals and where you're going. Look, a lot of instability right now, a lot of uncertainty, a lot of things are happening right now with a did change in at the top, change of the president. And we see so many different things and so many concerns. And I think now's a good time to jump into a lot of that and make sure that you are aligned with where you're trying to go to be able to get to financial freedom. It's why you started your business to begin with. So to have this conversation with us today is Michael Scarpati. Now, Michael is a seasoned entrepreneur and the co-founder and CEO of RetireUS, a financial wellness platform that is dedicated to helping individuals achieve financial freedom. Now, with over 15 years of experience in the financial service industry, Michael previously worked as an independent financial professional, designing custom strategies for high net worth individuals and corporate executives. Now, 2022, he co-founded RetireUS to disrupt the traditional financial services model by making financial guidance more accessible and impactful as well. The platform combines trusted human relationships with innovative technology to deliver fast, more affordable, and more effective financial planning for everyone, not just the wealthy. So outside of RetireUS, Michael serves as the chairman of the board at O, a nonprofit organization focused on empowering underserved communities through sustainable resources and support. Is passionate about collaboration and impact. Michael is driven by a mission to democratize financial advice and build pathways to long-term independence for all. Michael, what's up, man? Thanks for joining us today.
What's up, man? Thanks, Ty. That was wordful. That
Yeah,
was wordful.
sometimes I love it. It's all accurate, but sometimes I think they just throw in words to trick me and see if I can actually get
Yeah,
it
just
early
test
in
it.
the morning. We were before we got started, we were talking about financial consciousness, and I thought that was really interesting with financial consciousness because I've never heard of that phrase before. So, what is financial consciousness, and how are you tapping into that and using that to be able to help your clients?
You kind of nailed it right in the beginning. That word alignment, I think, is the most key phrase when we think through financial consciousness. It's how are we aligned with our money? People like to talk financial literacy, which is great. We need to understand what this terminology means, the techniques, the tools, the tips. But consciousness is alignment. How are we actually integrating those things with ourselves and our vision for the future? And our core values and how we want to live in this world and coexist with the financial comings and goings of our household.
And one of the things we talked about, and I love that, is financial, and we talked about financial freedom, right? And I just think it's such a buzzword that's thrown around. So, like, what does financial freedom mean to you, and what is it that you're doing different in your organization to help clients that aren't wealthy actually achieve it?
Financial freedom to me is all about optionality. It's about choice, right? It's the ability to act without fear related to financial decision making. So we can live our life freely and without judgment and fear about what the money, quote unquote, needs to do for us, right? When we have true financial freedom, there's systems in place that we know we're going to be okay. The money has intent. The money has kind of a mind of its own in a way, right? We intentionally built things in a way that the financials aren't going to control us. We can live our life however we, see fit.
And one of the things that I think is part of that is financial independence. What do you get? What are you doing to help people kind of get there from where they are to get to a point where they have that kind of independence?
It all comes down to systems, building systems. The biggest thing that most investors, most individuals miss when it comes to their finances is building true systems. So I think most people start with products and they're looking at, where can I save my money? What's the right savings account or mutual fund? And the issue with this is the product is only as good as the system that kind of operates it. So think like your operating system for your finances. What's your process? How does your behavior get managed? And how do you make decisions when it comes to those investments or the cash flow in your household? And so real independence comes from having very key systems in place. So understanding, exactly what we need from specific aspects of our savings, but then also having process. It all comes down to kind of process of how do we actually make decisions in terms of where money should flow, how much should flow to those areas, how much we ultimately need, how much risk. The systems really should be driving everything. And I think that's kind of where most people miss the boat. They dive in and get started with product before they put a system in place.
So, like, what kind of systems should someone be building?
The first, I think, comes down to just understanding your current situation. So it's really cash flow is kind of the first baseline system. And the first system comes with creating what we call a cash flow hierarchy. So it's understanding the goals that you have and how the cash flow ultimately facilitates the achievement of those goals with intent. So I think that to give you kind of take a step back, right? We need to clarify our vision of where we're headed before we can really make decisions with intent with the finances. Most people are stuck. It's just kind of the nature of life, especially, the entrepreneur, you're always in the business, right? And it's kind of this idea of working on the business, right? As an entrepreneur, you need to take time away from being in the day-to-day to map out where are we headed, how are we going to get there. The personal finances are the exact same way. Life sucks us into the business, into the life of our day-to-day cash flow management. And it's rare that people have the space to take a step back and work on their personal finances, right? Where are we headed? Where are we going? What do we ultimately need? And then kind of reverse engineering it back to the day-to-day. So that's kind of the first step is clearly understanding when we think systems, it's, what's your process? What's your system for defining where you are headed financially? And then what's your process for actually quantifying that, calculating those numbers, right? What we're going to need for retirement, what we're going to need for our short-term savings, what types of risks we're exposed to from the insurance side of the equation. And then how does that back end into our current life, our current situation, how cash flow should be ultimately managed in and out of the household.
How does the cash flow planning accelerate somebody's path to getting to financial freedom?
So I think that the big thing that most people are not very conscious of is their traction with their current goals. So we kind of fall into this habit, right? Habits dictate everything for us in life at the end of the day, but finances especially. And we fall into this habit early of saving generally for one key goal. It ends up being retirement. And that is extremely important. However, you find a lot of times that there's other secondary goals that just don't get any type of attention. And when we look to quantify how much our cash flow is actually moving in the direction of our goals, you find a lot of times that retirement is on the path of being well overfunded for a lot of individuals because we're maxing our 401ks, we're putting every dollar that we can to those deferral accounts, and creating a cash flow hierarchy, really creating cash flow clarity comes to understanding, are we at capacity, right? Or are we actually exceeding the savings allotment that we should for specific goals? And then how are we kind of redistributing, reorganizing it? So the two key areas that you see tend to be overfunded from cash flow is our cash reserves. That's always number one. We build up cash, we build up cash, we build up cash. And hopefully the emergency never comes. So we don't need that emergency fund, but that money's not working hard enough for us and it's not aligned with, what's more than that 6 to 12 month timeline. And then it kind of ping pongs over to the other side, which is retirement, the 20, 30 plus year time horizon, but we're putting as much as the IRS will allow us to do it in that bucket without really understanding how much we will need at the end of the day. So it's really prioritizing cash flow in relation to funding needs, right? What is the actual needs for these different buckets of money, if you will?
So, how do we figure out this cash flow hierarchy?
Yeah. So it starts with prioritizing our vision and our goals. So it's really all directly related to where are we headed and what do we need. So most people are navigating on autopilot without really knowing where is the end destination that we're headed. And by end destination, I mean exactly, can you quantify, can you put a number on 20, 30 years from now for retirement? How much do I need to have saved up, right? That all is driven by understanding our lifestyle, our projected healthcare costs. Is it going to be exact Absolutely not. But it's at least a line in the sand that we can draw that helps give us clarity to understand, one, how much needs to be saved, but then two, how does that money need to grow and earn? So the first step in building that cash flow hierarchy is getting all the chips on the table and then starting to organize them in, all right, in 10 years, I'm going to need X amount of dollars here in this bucket to achieve this goal. In 20 years, I'm going to need X amount of dollars in this bucket. And my lifestyle costs, $10,000 a month. So 3 to 6 months of cash reserve. I need, 30 to 60,000 minimum in emergency funds. And now you can kind of start to see where the cards are on the table, and you can start to reassess, all right, how is my day-to-day habits serving this or not serving this? Right? Taking that step back to unwind it and then realign everything with where you want to go.
Yeah, and I think that makes a ton of sense because you have to know your destination of where you're going to have any chance of actually getting there. So is that goal, we talked a lot about goals. Is the goals really a matter of saying, here's what I want to end up with in the end? And then in order to get that number, we have to get an idea of lifestyle and stuff. And that's kind of hard. Like when you're not retiring for 5 years, 10 years, 20 years, how do people really know the kind of lifestyle that they really want to have to even be able to figure out what that number is?
Yeah, I mean that could be the challenge for some people is just even knowing where to start in the process. The This is where working with a financial professional, I think, does add a ton of value, is being the sounding board, helping guide you to just start to think through and ask yourself some of the fun questions, which is, all right, you don't have to work anymore. Every day's a Saturday. What are we doing? Right? We can do whatever we want. Let's start there and think through it. If every day was a Saturday, you didn't have to clock into work. What do you do for fun? Right? What do you do for enjoyment? Flash forward 20, 30 years from now, where are you? Are you still in the same place? Are we traveling a lot? Is there family that we want to be closer to? Do we want to spend our time? You have to kind of just go through this exercise of clarifying what the vision for your future truly is. And it kind of is just another part of human nature, I think, where we get so stuck in just trying to figure out the next day, right? And and we're always kind of in it, that you never kind of take a real step back and like take a breath and say, all right, let's think, like, let's just imagine for a minute, what could my life truly look like? And that's at least a good starting point. Then from there, we can start to put dollar figures on it. We have historic inflation rates. Granted, the past couple of years has been a little odd, but it's odd because it's out of the norm of traditional inflation rates. So you can get an idea of what things will cost. So you start with quantifying it in today's dollars. If today was retirement, what would those things look like? And then we model it out. We project it out and we see what the cost would be. And then that's kind of, sounds like a lot, but that's kind of only really the first step, is seeing the cost. Then we need to take other steps to reverse engineer. Okay, well, if we need to fund this entirely from our savings, how much do we need to have saved up to not run the risk of running out funding this lifestyle for 25, 30 years potentially? And then from there, we reverse engineer it again, right? Based off of where we are today, what types of rate of return do we need to get in order to stay on track to hit that goal? And what levels of risk does that mean? And then that back ends into, all right, how much do we need to start saving? So it's a process. It's a holistic process that's going to really get you the clarity, but it starts with understanding what you want for life.
When people come to you, what are some of the most common mistakes you see? Is it they really don't know that end goal that they're trying to get to?
Number one most common mistake is nobody knows what retirement's going to cost. Nobody knows. It's incredible. And as a result, 50 million Americans over the age of 50 are unprepared for retirement. 50 million Americans over the age of 50 are unprepared for retirement. And it all comes down to that key data point. How much do you need to have saved up? If you don't know how much you need to have saved up, how can you possibly understand how much you need to save, how that money should be invested, what levels of risk you should take? More times than not, the biggest mistake is people don't know what they don't know in terms of how much they need to have saved up. The second biggest mistake is, as a result, they're taking entirely too much risk, especially those that are very close to retirement. They're taking risk because that's what they have always done. And they're in the 5 year to 10 year timeline of retirement where protection is much more valuable to them than additional growth on the accounts, right? They're close, they're there. 10%, 15% in a year actually isn't going to drastically change their lifestyle, but a negative 10 or negative 15% could completely derail their retirement timeline. And it all goes back to, if we don't know what we need, how can we make informed decisions on what the money should be doing?
How do people protect their wealth, protect a portfolio against like market downturns? Because my parents see what everything they've saved and worked for, they see it fluctuate 50%, right, in the markets when things go up and down. So like, and that's a scary thing, especially for them. Like they can't control what's happening when they get to retirement, right? So when they first got to retirement, like the markets were down and that, ever the value of things were half of what it was. So how do you set yourself up for that? Because you could know your goal, know the number you want to hit, and get there in a portfolio. But then you and I know, like, then you could hit retirement and that portfolio, the value could bottom out and you have a fraction of what you think you need. So how do you protect that?
I love that you asked this because this is the best kept secret. This is systems based planning. So the first thing that we need to unravel here is we've been programmed to believe that that's the case, what you just said, right? We are at the mercy of the markets because it's the way securities operate. Even if you're in stocks or bond mutual funds or ETFs, every day the value is changing. Now, the truth is that there are a ton of different types of investment strategies that exist out there that can completely protect you from market risk or can shield you from losses of market downturns. The reality is, unfortunately, they're not super available to the investing public, and they're kind of the best kept secret. So many times, these are kind of gate kept by the industry because independent fiduciary financial planners and investment advisors that have what's called an open architecture. They're not tied to just the general stocks, bonds, mutual funds, or specific investment types. They have a much wider toolbox. And in that toolbox exists things like structured products, principal protected indexing, or buffered indexing, which is, imagine following the S&P 500, but you have to hold that money there for 2, 3 years potentially with a big bank. Generally, these are issued with big banks. Now, it's going to work like a CD. You got to keep it there for the next 3 years, let's say. But with those terms of illiquidity for 3 years, they're going to give you terms on the investment, which is you can follow the S&P 500, you can follow the Dow maybe or the NASDAQ, big major stock index. And we will give you a promise that even if the stock market crashes over the next 3 years, we'll give you back your principal. The principal is protected from the market. Now, with that promise, they're not going to give you all the upside, but they'll cap your growth. So in a 3 year Dow note, let's call it principal protected, full bottom is protected, but on the upside, maybe you're capped at 25%, call it, right? And again, these are just example terms that I'm throwing out there for you. But you see a lot of these. So when people are getting closer to retirement, there's actually ways that they can shift their money into different buckets, right? And this is when we talk about building systems. A system for retirement has a very clear understanding of how much you need to have to support your lifestyle. And if we can work towards that goal, or if we're already very close to that goal, and we can eliminate as much market risk as physically possible, that's how we're starting to implement a true system for our money. So principal protected notes or indexing is one example. A buffered strategy. Have you ever heard about a buffered note, buffered strategy? Yeah, those are the other really popular ones. Buffered is just, instead of that full principal protection, it'll protect a percentage. Maybe it's 15 or 20% of the downside. So again, you can follow a stock index, and if it goes down, let's say it goes down 50% in the next 3 years, but we had that 20% buffer, well, our account would only lose 30, right? It wouldn't lose the full 50. So there's different tools and safeguards that you can put in place. The issue, generally speaking, is access. Most people don't hit specific asset minimums to gain access to those types of advanced strategies, or it's just unconsciously incompetent, right? We just don't know what we don't know. And that's one of the big components of the RetireUS platform. We're connecting everybody with independent fiduciary planners and advisors with no asset minimums so that you can not only work with the best, you can access the best when it comes to advanced strategies and investment options.
So a couple things you just said. I've recently realized that I think that fiduciary part is like a rare thing. Like not a lot of professionals have that. So what does that mean? And talk to me a little bit more about that because I've come to realize that most in that industry do not have that designation.
Yeah, it's a good point. And that's exactly why we built the platform for RetireUS. It's only about 10 to 15% of financial professionals are fiduciary. So 85 to 90% of the professionals that are giving investment advice to the public do not have to do so. That's in the best interest of the client. That's a scary thought and it's a scary reality. It just is the way that it is. And it's not because the professionals are bad, it's because of the nature of the industry. Most of the industry is dominated by large institutions. Those large institutions have a proprietary product set or a platform that they want to, that's their business, is to get assets into that platform and that proprietary product set. The vast majority of financial professionals work for those institutions. So it's just the nature of how the industry's built. Independent fiduciary is the the track where you can really open up the box and make sure that you're working with someone that has your best interest in mind. The problem is that there's only two lanes to get independent fiduciary advice. The first lane is your traditional assets under management advisor. And the reality is it takes the same amount of time for that independent fiduciary to work with somebody that has $100,000 that it does with somebody that has $1 million. So they move up market, right? Most people end up getting priced out in terms of asset minimums because the fiduciary can only take on so many households that they can manage in a year, right? And really their entire practice. And so financially, they're incentivized to actually work with people that have, higher and higher and higher asset amounts because it's how they're going to get compensated in the process. So most people just get left behind. It's just the reality of access. And then the other lane is flat fee fiduciary, which is $5,000, $10,000 out of pocket. You're writing a check, keeping an independent fiduciary on retainer like an attorney. And again, most people just don't have the free cash flow or the willingness to write that check every single year for financial guidance and advice. And so, most of the people end up kind of going to the traditional channels in the industry that aren't fiduciary. And it's just the way that the industry exists right now. That's what RetireUS is here to disrupt.
What does Retire US do? Like, what are you guys connecting people with the right professionals?
Yeah, so it's a platform. We blend technology with human relationships. So it's not a robo advisor. It's a platform to work with independent fiduciary financial planners at a fraction of the industry standard cost. So instead of it costing $5,000 to $10,000 a year, our subscriptions start at $60 to $150 a month. And then there's no asset minimums. So it doesn't matter if you have $10,000 or $10 million. You're going to be able to work with independent fiduciaries that have open architecture, can vet the entire marketplace, work with advanced strategies. And so it's really about making it easy, right? Making it simple, making it cost effective for people to work with the best.
That's really interesting. I don't think I've never heard of a similar concept before. So that's really cool. I mean, you guys sounds like you're really making a big impact.
Thank you for saying that. Yeah, it came just from being in the industry. I've been in this industry for 15 years and I've seen a lot of bad financial plans. I came from the independent track where you have this open architecture, you have this different, badge of fiduciary responsibility, and you come across a lot of quote unquote plans that just are missing key components. And you can just tell it's the lens of the professional just doesn't operate in a specific scope. And so really what happened after 10 years of this process is we started to get really frustrated with how the everyday person is being fed financial advice and just the level of quality that they have access to right now just really didn't seem very fair. And we started to kind of think through, all right, well, what could we potentially do to make this more scalable. And at the end of the day, what we've built with the technology of RetireUS is we've created a system and a process and a platform that makes fiduciary guidance much more scalable for the advisor, actually. And so because it's more scalable for the advisor, it takes a lot less time for them. They can manage many more households at scale. And that opens up the lane for households with less investable assets.
We see things like AI making such a difference right now. Like, I'm interested, what do you see as the future? Like, what innovations or trends are you seeing that impact the industry now?
It's going to be massive. I mean, I think we can all start to see that this is going to change the world in a profound way. In the financial services planning industry, I think it's going to be a lot like it will be in the medical profession, where it's going to be a big augmenter. It's going to create the ability for higher quality of guidance, advice in the medical sector. It'll be, higher quality care at scale, right? I think it's going to create a ton of scalability. It's going to do the same thing. It's something that we're working with very intentionally in terms of how the RetireUS platform is built to just create ease for the professionals, right? So there's a lot of just mundane components that are going to be removed in all facets of the service industry, and finance is going to be no different, where it's going to create more impactful time for the professionals with other humans versus spending that time behind the scenes kind of working in the weeds.
For people that are, watching this, they're just kind of overwhelmed with financial planning. Like, what's a simple step that they could take to move forward?
I think the first step is actually it's a step back. Right? I think the first step forward is actually a step backwards, and it's taking inventory of what do you want in your life financially, and taking inventory of those feelings right now where your stomach kind of might turn a little bit. Where are the areas of stress? Your current situation, mastering that is the foundation of everything. I think most people want to jump in and start saving, and they never really clarify actually why, right? What's the why? That's where alignment starts with financial consciousness is why do we want to go where we want to go? Why do we feel the way that we feel if we feel uncertain or if we feel stressed? Yeah, I've been in this industry for 15 years, and what I found is financial planning, financial household management is not supposed to be stressful and overwhelming. If it feels that way, it's because you are absolutely missing something. And intuitively, you do know it, you understand that, but you haven't identified what it is. And taking that step back helps us kind of understand the now. And then by understanding the now, we can make decisions with intent for the future.
I love it. Michael, everybody watching today, if they want to take a next step, they want to take action, what should they do? Where should they go?
So you can go to RetireUS. We have a free financial checkpoint that really helps you get a clear picture of the now. So it will assess your retirement pacing, your tax planning, your various risks, and it pulls out what we call financial red flags. These are the blind spots. Tend to be the things that are in your way that we are unconsciously incompetent about. We don't know what we don't know. And it's meant to kind of bring those things to the surface so that we can start to identify how we may need to change some behavior or clarify components of our finances in order to feel better, right? To feel more aligned. So it only takes 3 to 4 minutes of time. Typically, it's multiple choice, and you can register for free on retire.us to get access to the tool.
Cool. Thanks for joining us today.
Thank you, man. This is great. I appreciate your time.
Hey, so listen, if you're watching this, make sure you go to retire.us right now. What he's talking about with this financial checkpoint, it only takes 4 minutes. And the nice thing about this, actually less than 4 minutes, and the nice thing about this is that it even identifies red flags and problems that are there that you need to address. So if you want a next step, we all need to be doing this. And as entrepreneurs, we understand it's just a little bit a step forward, right? It's just forward momentum, not going backwards, as Michael had mentioned. So the easiest way to do this is just go to retire.us. Right there, you're able to see where you can click to take the financial checkpoint. It's less than 4 minutes. And there you're able to get everything that Michael just said, including alerts of things that you need to be aware of. It's the first step in getting you the plan that you need to be able to retire the way you want, have the financial freedom. So make sure you check it out right now at retire.us. Thank you very much for tuning in. Take care. Have a great day.
Thanks, Ty. See ya.